Hi, hello, welcome to Letham Trading. Now we are going to see Nifty end of the day analysis of June 1st and the trade setup for tomorrow. See, what we discussed in yesterday's video, we may have a put position at H3. If there is a clear price action at H3, we can think about taking a put position at H3 or at L4 or at H4. We'll see the price action and observe the CPR relationship. Here the CPR is in downtrend, so most probably we'll see for a put position and observe the width of the CPR. Here the width of the CPR is narrow, so the market may be trendy if the market gives any breakout, that is H4 or L4 breakout, but where the market opened. Here the market opening is at this point, right? And we'll observe the first 5 minutes candle, right? And if you observe this first 5 minutes candle, it is a breakdown to the H3, right? Yes, you can take a put position at this point, but if you observe the IT sector, the first 5 minutes candle in the IT sector is a breakout at H4, right? So there is a chance the market may take a good momentum to the upside, and that was the reason you may think about taking a put position after the first 5 minutes candle closing. Moreover, yes, you can take the put position at that point because see, if you want to avoid a trade on the put side in Nifty today, see the first 5 minutes candle, where the market closing of the first 5 minutes candle, it almost near to the H5, right? So there is a chance the market may take a retest. So this first 5 minutes candle, most of the time if the first 5 minutes candle breaks, then the closing will be at this point. If it completely clears about 75% of the space with this first 5 minutes candle itself, you can't have a price action with that candle, but moreover it will have some momentum. And observe, with this first 5 minutes candle you can take a put position and your target and your stop loss. Yes, we think about first our stop loss, right? So our stop loss will just above this first 5 minutes candle. And if you observe here, it has a clear back-to-back 3 red candles, and our target will at least be up to H3. This is L3, or at least up to L4. But what happened here? There was a huge consolidation before hitting your target. So how you can avoid this type of consolidation? It is unavoidable consolidation today, because if you observe a clear price action after the market's opening, you have to know how the market will behave, like whether it will continuously come to L4 or it will return or it will take some time. That will decide the market. At end of the day, how the market is going to be, whether it is going to be a positive note or a negative note, will decide the market's movement in the intraday. So if it opens at this point, if you take a put position, what is our target at L3 or H3, right? If it want to continuously come to this point, what will be the next move? The next move will definitely be onto the call side, right? Because it has continuously fallen like anything. So that was the reason it may take a support, and at the end of the day it will end up with positive note. But the market is not ready to be onto the positive note, so that was the reason it has a clear reverse from this point and it has consolidated. Moreover, it was not at all our stop loss hitting, but there is a clear premium melting, right? If you have a 10-point stop loss, mostly will think about 15 to 20 point stop loss. But if you are with option buying, if you have you see, this is an expiry day, right? Whenever there is an expiry day, you should take the next week's expiry. Never think about taking today's expiry. See, if you observe, there are five trading days, right? Mostly on Wednesday and Monday, Wednesday, Friday are going to be a good days to take a trade. There will be a good direction to take a trade. But on expiries, that is on Tuesday and Thursday, the market is not going to be just as easy as those days where we take a trade. This Tuesday and Thursday, they don't have a clear pattern most of the times. Tuesday used to be a good day to take a trade, but after the implementation of this expiry of Nifty, even Tuesday is not going to be a good day. Earlier, when on Monday, if market is not giving any momentum, it has to take a momentum on the Tuesday. But nowadays, after the expiry of Tuesday, there is no moment in Tuesday too. So that was the reason we have a chance to take a good trades on Monday, Wednesday and Friday, and on Tuesday and Thursday you have to be careful, and you should avoid taking a trade whenever it is not possible for you. And also, if you have a stop loss hitting on Tuesday or Thursday, you should just avoid taking a trade on Thursday. 90% of the time the market is going to be sideways only. Only 10% of the time the market is going to be trending, and most of the traders will try to book the 10% of the times and will lose their 90% of the money. So that was the reason you should be careful on expiry days. You are not an option seller, right? If you are an option buyer, then Tuesday and Thursday are not going to be your days. You should be careful while entering into the trade on those days. How you can think these Tuesday and Thursday to be on like a same days? You should take the next day's expiry on Thursday. That's how you can avoid an expiry day trades. And if you observe here, after this consolidation, the market has clearly moved to our target, right? There is no stop loss hitting actually for this trade today. But if you just exited because of this crossing of this H3, then you have minimum stop loss only. You cannot have a big stop loss. See, most of the traders will tell you the CPR has been clearly broken. Yes, you can take a put position here at this point. If you take a put position here at this point, the market went till this place, right? So your stop loss will definitely hit. Generally, this CPR is not going to be a place where you should take a trade. The CPR is just for a directional setup. That's all. We can't take a trade with CPR. We'll have a clear setups at our Camarilla levels only, and for this day there is only one setup, and if you miss this setup, then you should definitely away from the market. And if you observe, if we miss a trade in the morning, we think about taking at around 1 to 130, right? If you observe here, it is a clear lower lows forming, and you can think about taking a put position if you have avoided in the morning. And if you have taken a clear put position at this point as your target, it was a clear target to you without a consolidation, you can avoid this consolidation. But if you have a clear trade in the morning itself, it's unavoidable consolidation for today. And if you observe the market setup for tomorrow, this is a downtrend CPR. When there is a downtrend CPR and there is H4 reversal will be our super setup. And if the market is in between this range, again the market is not going to be easy. Here this L3 will not think about taking a trade at L3. Will think about taking a trade at L4. Whether it is a support or it will act as a support or resistance will be decided in the market, live market. If it breaks to the downside, we need this 20 EMA, right? So it will take some time. Think about taking put position. If it is a clear support, then think about taking call position. The only two setups, these are the only two setups. We don't think about taking any other setup for tomorrow. We'll just avoid taking it trade if it is in between this range. We have clear setups at H4 or at L4. Thank you. I hope this video will help you. Please subscribe to our channel.